Today in this video, we're going to talk about the different types of income that you can claim on your mortgage application. How do we calculate your income for your mortgage? Check it out. Hi, my name is Rhonda Burgess, and I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area, and my firm is Southern Living Realty Partners. I just want to go over right quick. We're going to talk about your income on that application, on that mortgage application to get your house. We're going to talk really brief today about how that income is calculated. First of all, let me start off with my W-2 people. My W-2 people, that means you work a job, you get a paycheck every week, every 2 weeks, twice a month, once a month, whatever. You get a paycheck and they take out taxes, they take out Social Security, they take out all of these other things out of your check. You are a W-2 employee. For you W-2s, we calculate off of your gross income. What that means is your gross. That is before the taxes come out, before Social Security, before your insurance, before your 401k deduction, whatever it is calculated on your gross, okay? So if you make $20 an hour, okay, and you work 40 hours a week, then you make $800 a week. We're going to take that 800 times 52 weeks. We're going to divide it by 12. That's going to be your monthly income, okay? It's just that plain and simple. It doesn't matter what is being deducted out of your paycheck. I've had a lady call me this week who says she had a garnishment from where she here we go. She co-signed for somebody on a car and they didn't pay for it, and now it's being garnished out of her check. So she's thinking this is going to hurt her. Well, it's not going to hurt her on the income calculation because the income is off of your gross, okay? But that garnishment will come into play when the underwriter looks at your paycheck stubs, because they're going to want to know how many more payments of this do you have to make, what's going on. You know, they're going to want to know the whole deal. But as far as your annual income, how we calculate your annual income and your monthly income is off of just your gross before any deductions are taken out. Next, for my 1099 people, 1099, this means that you receive a 1099 from a company. Maybe it's Uber, maybe it's Shipt, maybe it's DoorDash, maybe it's you're working for a company and maybe you're working from home or whatever, and they do not take out any taxes. They don't take out any income tax. They're not taking out any Social Security tax. They're not taking out anything. Then you are a 1099 contractor, okay? So you cannot use that gross income like you can on a W-2 person. It doesn't work that way. When you are 1099, meaning they do not take out any taxes and they just give you all your money. You get all your money every week, every month, however they pay you, even if it's daily. What you have to do on that income, this is where the Schedule C comes in on your income tax, because with you being a contractor, there are expenses that you can write off. Like if you're an Uber driver, there's like mileage, there's gas, there's different stuff that can be taken off. Let's say you're renting a booth where you do hair or you do nails, okay? And so they may, and depending on how it's set up, they may send you a 1099. But then you can expense off that booth rent. You can expense off some of your supplies and things that you need in order to do your job or to make your business run. So in those cases where you receive a 1099, you are allowed to take out all of those expenses. Okay, you're allowed to write them off. Okay, but just like and I'll link the video here for you. Just like I told you before, my self-employed, my 1099 people, you're gonna have to take that hit for 2 years and not write everything off if you want to get that income in. There's no other way right now, this is February of 22. I hope and pray they come up with some type of mortgage product in the future that will give us more credit for the money that we make, and we don't have to, not write everything off. But you're going to take the hit for 2 years. Don't write everything off for 2 years in order to get all your income in order to be able to qualify with a higher income amount. Because if you make $50,000 and you write off 40, then your net income is only $10,000. Period. So just know that you write everything off, you're not going to have any money left to qualify for a mortgage. You self-employed, 1099 type people, you need to take the hit and not write everything off for 2 years, because they're going to want to see 2 years worth of tax returns where you have enough income reporting. So if you have 50,000 reporting 1 year and you don't take hardly any deductions, and let's say that brings it down to maybe 45,000. Okay, you took a little bit of deductions. So you got 45,000 this year. You make another 50 next year, and you write off, let's say $10,000. So it's going to give you 40,000 worth of income. Okay, so what we're going to do is we're going to take that 40,000 and that 45. We're going to add them together. That's 85, and then we're going to divide that over 24 months. That's going to give you your monthly income, and that's how you're going to be able to figure out what your monthly income is as far as qualifying for a mortgage. But we will not count that gross income on that 1099. We're looking for what expenses do you write off. Again, if you want to make the most of it, you're going to have to suck it up for 2 years, pay taxes on that money, don't write it all off, and then you'll be able to buy a house. And one more tip for my people who are maybe like a hybrid, meaning let's say you have a base pay every month, right? And let's say that base is $2,000 a month. That's guaranteed. That's your base. And then you get paid commission on top of that for your sales or whatever, okay? That's going to have to be calculated. You're like both. You're like a W-2 and a 1099, okay? What we're going to want to see on that bonus income is it consistent? See, you can't, okay, like you're getting your base of $2,000 a month, right? And you have a really good month. You know what I'm saying? You went out and sold some stuff. You did the doggone thing. You understood the assignment. And let's say your bonus is $40,000 or whatever. I'm just throwing out a number, okay? But the rest of the year, the other 11 months, you really ain't made no bonus. Maybe you make $1,000 a month. Then again, we're going to take that bonus and we're going to average it out over however many months, over 12 months, if it's a year, over 12 months. You know what I'm saying? Because that's an abnormality that you sold that much, that your bonus was that much. So there's no way the underwriter is going to assume that this is your correct income, because that bonus was a one time. Now, on the flip side of that, let's say you consistent, you know what I'm saying? You do your thing, you get out, you get your numbers, you doing good. Every month, your income, let's say your bonus, you still got the $2,000 base, but let's say on average, you average $3,000 a month in bonus. Then that's going to look good. Then, see, it's consistent. Then we can use that income. We can use that bonus. But it's just like with the self-employed people. You're going to have to show consistency for at least 24 months of receiving that type of bonus income. Okay, so just remember that everything is really predicated on 24 months, because it's assumed, again, that if you can do it consistently for 24 months, this is really what your income is going to be even going forward. Okay. Again, my name is Rhonda Burgess, and I am a real estate broker and mortgage underwriter here in the Nashville, Tennessee area. If you need help with buying a home, buying your first home, buying an investment property, whatever, please give me a call. I would be happy to help you. My number here is 615-554-0832. Thank you, and as always, have a blessed day.